This is Lawrence Lotz, and welcome to the Wolf of Queen Street.
Welcome back to the Wolf of Queen Street podcast series. Welcome back to the audio or the video series. But before we get started today, I just want to shout out to my sponsors. Lighthouse Financial, they're leading provider in financial solutions for anyone that's in the property, investing, needing help in accounting or mortgage help or with the banks. Because fundamentally at the moment, banks are a hard time to get your wealth out and get all the answers you need, and they can help you. So if you need any guidance and take a process and make it more seamless, Lighthouse Financial is a team to go to. And as an existing customer, I can say they're amazing to work with. So if this is something of interest, you can find them at lighthousefinancial.co.nz. But today I'm super pumped to have on the show Jack Gibson, a wealth building strategist that is helping ambitious entrepreneurs out in the world sort of build, create, and make wealth, and not just have wealth for 10 or 15 or 20 years down the path, but wealth that they can use on a day-to-day basis from tomorrow if you do the right strategy. And I thought I wanted to bring him onto the show so we can chat through it and see sort of the key trends at the moment in the wealth creation and investment market. So, Jack, welcome to the show.
Thanks so much for having me, Lawrence. Pleasure to be here.
Just a little cackle, and I'm happy to talk to to bring it out and have a laugh at myself. This is the third take we've just taken on the start on that because I'm using a bit of a new platform. I made, after almost been 3 years in the podcast game, I made that novice mistake of me and Jack got into the podcast and got about 3 to 4 minutes into it. And I looked into the top corner and realized there wasn't a red button saying record. And it's one of those embarrassing moments where you got to say to your guests, I'm sorry, can we redo that again? Because I've made a mistake. And thank goodness, Jack, thank you so much for, understanding that. And I'm sure you, as a fellow podcaster yourself,
Yes.
understand the moment of making some mistakes on the show.
We've lost entire files of like 3 different recordings that we did with guests that came on. So don't feel too bad.
but take it back, Jack. Obviously, you're a wealth building strategist. There must be some knowledge. There must be some backstory around that of why you got into in that area and why you're trying to help people out there grow their wealth and take the next steps in their wealth creation.
Yeah, no, it can go all the way back to when I was 4 years old. My mom, she walked out of the nursery school, or actually came into the nursery school to pick me up, right? And the teacher said, do you know that Jack can count money like accurately? Like he's counting all of the money that's coming into the donations to the class. And she's like, oh, yeah, he's been doing that since he was 2. So obviously, like I always loved money. I just was fascinated by the whole power behind it. I love making it. I love, spending it. I love investing. I love giving it. I hate losing it. That's the only thing I haven't been able to embrace yet as far as money goes. But I started as an entrepreneur back when I was 19 in a direct sales multi-level marketing company. I was a freshman in college. I had a rich dad and a poor dad, so to speak, right? I know you guys probably know that book by Robert Kiyosaki.
Yep.
And I kind of had that in a way. My uncle was a wealthy farmer. He had 3 different companies. My father was the professional. Not to say my dad was, my real dad was poor by any stretch, but he never was able to really build any wealth to speak of. Whereas my wealthy uncle farmer, he passed with like $4 million by age 56. So it just gave me a real sense of like, how do you really build wealth? What are some things to look for? And he was an entrepreneur with 3 businesses. So I'm like, okay, well, that's what I'm going to do. So I'm on my 3rd company now with Indestructible Wealth. And I don't know, maybe I'm just trying to mirror him in some ways financially. But so I got into direct sales because I wanted to be in control of my financial future. And I got this opportunity presented to me that great opportunities often are presented and disguised as hard work, right? So I worked like crazy throughout college for 3 years part-time. I was making more money than my college professors. I had a really strong business going, and I banked all of that cash because I wanted to invest it, and my goal was to be a millionaire by the time I was 30. And so I saved up 50,000 in cash, by the time I'm 21, 22 years old, which, 20 years ago was probably, 100,
And
150,000
plus, yeah.
US, right? The money's been devalued since then. But I put it all in the hands of a stockbroker, a financial advisor. He told me when I went into his office, because I was looking to put my money to work, I wasn't getting any return in the bank. He said, look, the stock market's been going up. And at that time in 2000, the US stock market had been cranking, was tech stocks in particular were up 40% for the last 4 years. And he said, this is the way to go. So I put all my money into his hands, and then it went into tech stocks. I had no idea what I was even in.
Yeah.
And then that was the dot-com bubble crash within 3 months of that. So all of a sudden, I'm 22 and I lose, half my money that I worked and
So hard
scrimped
on.
and saved and bust my butt to get. And I was just really disheartened, like really, I was like, man, this is terrible. So I knew that, that there had to be a better way. So that was kind of the start of my investing career. It didn't go so well, but it really taught me a lesson about having your financial resources, your investments into the right buckets. You need to have a baseline, a kind of foundational setup, which I consider putting money back into yourself. Self-education, books, courses, mentors, coaches, seminars. So if I had everything to do all over again with that first 50,000, what would I do? I would put it all back into myself, into my mind. Right here between your ears is the best real estate that you'll ever own. And it's 100 times more powerful than any existing financial asset out there, because that's where you create earning power. And you can boost your earning power by boosting your skills, your knowledge, and your mindset. And your earning power at the end of the day, I can earn so much more money just with my mind than I could ever earn, even if I caught Bitcoin at the right time, right in the early stages. I can still outpace that over the long haul. So that's kind of where I got started, Lawrence, and it's been quite the ride ever since.
It's through those bumps and those struggles that Jack, we got to be able to take from it and learn from it, right?
Yeah.
And it's interesting. I love how you say that if you could go back 20 years and have that 50 grand again, you would spend it on the education and the progress of your own knowledge and so forth to know that you're making the right decisions. And it shows in the hindsight of actually the right decision we need to make. And fundamentally, a lot of people in business, small business owners, entrepreneurs, just any mom and pops don't understand that any layer of success or any layer of progression forward still needs the education to allow to achieve that. And that's what you're talking about. You would have spent that 50 grand on to get in your education and further. Sorry to interrupt the current show, but just to let you know, if you're enjoying what you've seen, make sure you hit the subscribe and like button. So next time another episode comes out, you'll be able to see it first. Back to the show. But this brings me back into the main key things I was excited to chat about you on the show was you've now had 20 years. You have spent your money on your education and all that through your past and all the guidance. And that's why the big thing I wanted to talk to Jack about was sort of what do you see as the 5 key top investment options around sort of 2021, maybe still progressing into 2022 at the moment, that people out there that are interested can take a look in, mostly obviously around the American market space, which Jack specializes in, but it depends where you are in the world, that these 5 key ones can still play some part in your investment bucket.
Yeah, it's a great question. I just wanted to add before I dive into these top 5 that I put out that message, that philosophy of like, what would you do, or what would I do with the first 50,000? What should you do with your first 50,000? I put that out on the Instagram Reels, which is the new short form video that they've produced to compete with TikTok.
Yep.
And I just, it's one of the 27 videos that I've done so far to try to gain traction. And some reason, like that just caught the algorithm and it went viral. And it hit 100,000 views, and I got trolled on that message so bad. Like, people were cussing me out. It was very, very, there was a lot of hate on that message. And I'm thinking, why is there so much hate? I'm just telling you guys, like, from a voice of experience and wisdom. And it's because human nature is, they want to get rich quick with the least amount of effort possible. So I was telling them essentially that that's not the right way to go. Putting money back into yourself is playing the long game, and
Correct.
it's not going to take your $2,000 or your $5,000 and turn it into $1 million or whatever in a year. Like that's what they wanted to hear. So anyways, I thought that was it didn't bother me because I'm embracing polarization, and that really helped push that out and give me more engagement, right? So
Yeah, gotta love it, right?
Yeah.
There's no such thing as bad publicity.
That's exactly right. That's what my one of my coaches told me when I was going back to him, like, man, what do I do? He's like, no, this is great, man. Just
leave
embrace
it.
it.
Just leave it.
Yeah, top investments in the, I don't know necessarily in this particular order. I think it depends on the investor, like where they're at in their particular kind of curve of investing. But self-storage is my favorite investment. We can dive into why. Single family rentals have been very strong. Pre IPOs, this is pre initial public offerings. The rules changed about 5 years ago. A lot of investors don't even know it, that regulation A+ deals you can do without being an accredited investor or a wealthy venture capitalist. And then small cap tech stocks, I see a huge future as the technology kind of gap continues to grow. And then Ethereum, I like crypto, but specifically I think Ethereum within the crypto space is definitely my favorite bet.
Awesome. I love most of those. I've invested in 4 of those out of your 5. So I'm excited to go through it and understand more in each one of those.
Which
So
one have you not done, out of curiosity?
So your first one, the self-storage.
Self-storage, for sure.
So I'm really intrigued to hear that. So as Jack said at the moment, the 5 key ones, obviously not in order from top to bottom. We spoke about self-storage, single-family rentals, pre-IPO, small cap tech stocks, and Ethereum. And I think that's a really good 5 investments. Like I said, personally, I've done 4 of those out of that 5. But let's get straight into it, Jack. To anyone that's listening at the moment, let's go straight into self-storage.
Sure.
As someone that, and I'm happy to be proven wrong, as in the New Zealand market space, property, residential property, commercial a little bit, is the main sort of gold here. I don't know if anyone actually plays in the self-storage place, but and I'm happy for someone to tell me. And I see a lot of my American colleagues talk about self-storage a lot. So take me through this.
Well, self-storage, the reason why I love it so much is because it truly is a passive way to play real estate. So a lot of people say that real estate is a passive investment. Well, if you own single family rentals, or you've ever, if they're really not a passive game. I mean, you still have a lot of decisions. You have tenants, you have toilets, and you have trash, right? And even if you have a great property manager, you still have to deal with those things, even if it's through fielding calls from your property manager. You're going to have tenant turnovers, you're going to have just lots of decisions that you have to make, and there's lots of problems that come up with that particular investment. Again, it's still on my top 5, but you just have to understand, it's not a completely passive investment. Self-storage, you don't have tenants, you don't have toilets, you don't have trash. People are storing their stuff, so I guess they're kind of tenants in a way, but there's not the complexity involved. It's a 10 by 10 locker. They pay $150 a month, and the average stay is 15 months.
Mhm.
What causes people to come into self-storage is life-changing events. So they either move, someone dies, they get a new job, something caused their stuff to come out of their house and to go into storage. Now, most people, they think that they're going to store it there for 2 or 3 months. This is the typical kind of the trend from looking at it from the perspective of who's our
Mhm.
customer, right? So they put their stuff in here and then they pay their $150 on auto pay. And then they have this option on a particular Saturday, right? Do I, it just makes me laugh because this is how I would be.
Yeah.
Do I give up my Saturday to go deal with the stuff in this locker and figure out where to put it in my garage? Or do I just push it off another month? Well, I'm going to push it off. I'm going to keep pushing it off. So that's what happens is that people, they go into storage and then they end up being a long-term customer. I saw one of my business coaches, they were in a particular locker. They posted this on Facebook. They had their stuff in there for 15 years, paying $250 a month. And I thought
Crazy.
to myself, this is why I love self-storage. This is because people, they were a completely passive investment for that owner. So as far as how to get involved, the way that we do it is through syndication. So that's obviously where a group of investors all come together. They pool their money together so that they can take part in larger deals. I have friends that I've known for a decade that run the ship. It's a company called Store Space, and they've done 120 deals, and their lowest performing deal out of all 120 over a decade is 10% annualized returns. Their typical returns have been 25% annualized. So, $100,000 is going to double in 4 years. That's incredible. Not only that, but there's safety because it's a recession. I wouldn't say recession proof, but recession resistant. The economy goes down, people still need a place to store their stuff. It doesn't matter. The other part about it that I love is that you can get involved for chunks of it's a larger game, right? For $50,000 is usually the minimum kind of investment. Is that you have to be accredited, but if you're out of country, I don't believe that the same rules apply too. So that kind of helps more people access that type of investment. It does have the only downside that I see, Lawrence, to it is that it is not it's not a short-term play. I mean, usually you're in it for 3 to 5 years. So when your money's in, it is not liquid. But however, it is collateralized. So you always have this real asset that has real world value. So, to me, it's my safest and highest return investment. If you could kind of combine all the different factors together that make a great investment, it has the highest degree of safety and return.
Yeah, it's very much similar to sort of the commercial space over here. I was taught by sort of a mentor, not a person that was a mentor without him realizing, and guiding me 10, 12 years ago. And he was saying, family homes, residential family homes are capital growth and equity and everything else, and commercial properties is cash flow. So you can buy a commercial property and it's not necessarily going to go up 5, 10, 15% in value, but it's going to bring you that month-to-month cash flow, and your 50 grand is not going to become 70 or 80 or 90 grand over that, but it does allow you to add that spectrum of cash return and cash flow across your bucket of wealth that you're creating.
Well, yeah, we're playing the game a little bit differently than that. And yes, I agree with you. Normally, commercial is a cash flow play. You're buying it based on the cap rate or cash flow that it provides. This this investment is different because the goal of it is to, yes, you want cash flow, of course, and you're going to get cash flow sometimes from day one, depending on if they buy something that already has existing tenants and just needs to be repurposed, or if they're taking, say, a abandoned big warehouse, Kmart type of building, and they're doing construction to
Mhm.
repurpose that completely. Now that could take 2 or 3 years before you
Yep.
start getting any cash flow. But the ultimate goal is to exit to a large fund, a pension
Mhm.
fund, hedge fund, institutional buyer. What they do is, they come in after, we've shown that it's a stable investment, it's producing, methodical cash flow,
Mhm.
and they'll buy it at a lower cap rate than what we're in it for, right? So that creates huge exits where you're doubling, even sometimes they triple your money in 3 to 5 year plans. So yeah, cash flow and capital gains is why I love it too.
Oh, that's awesome, Jack. I'm going to shift on to the next one that intrigues me more. I'm going to shift single family rentals down to the bottom because it's
Mhm.
something we know really well, and we'll get right to the end. But talk me through pre IPOs as a top investment option at the moment or across this year.
Yeah, what I really love about pre-IPOs is that, if you look at how all the really, really serious wealthy that made their money, right? They get
Hmm.
in on the early stages of something. They're not typically buying something at retail price, which
Hmm.
is our stock market is at typically priced at market price, right? Now,
Yep.
of course, we know that the market doesn't always act rationally. There are credible companies that are priced below their actual value or market
Hmm.
price. But on a whole, even then, I mean, your discount isn't, and you're not getting an incredible discount. When you get in on pre IPOs, you're getting in on the early stages where the company's share price is set. It doesn't move based
Hmm.
on the whims of the market, of the politicians, of whatever the Federal Reserve is deciding to do, like what we're see happening this week with the volatility in the US market.
Hmm.
you know it's based upon the actual, like, the value of where is that capital going to be placed to really its highest and best use to help grow that company. So with pre-IPOs, since the laws changed for the US, it allowed the normal everyday Joes, so to speak, to be able to get in on these deals before they go public. So it's
Hmm.
called a Regulation A plus deal. Essentially, you don't have to be an accredited investor anymore, meaning you don't have to have $1 million in net worth or 200,000 in income as a single filer, and you can get in on these deals for a lot of them for as little as $1,000. Most of the big, you know, venture capital type deals are a minimum of 10,000. A lot of them are even much higher than that. So if I can get in on a company in the early stages, I can get a very low buy-in, low share price, and then I wait for that company to eventually go public, then that's where I can, when it really finally does go public or gets bought out by a bigger company, I mean, those are where you're going to see, 10x, 20x returns.
Hmm.
Again, it's not a liquid investment. Once you buy in, your money's stuck. It's kind of stuck there because it's not on the open market. You're not
Yep.
able to sell it like with the click of a mouse, like on one of the platforms.
Hmm. So, where would, if anyone's interested, where would a person go to find out where pre IPOs? Where's the platform to look, or do they just have to pay attention to the market and what a company is and a company talking about it, or is there sort of tips and tricks for where they can find out at one place? It goes, okay, this is the next place coming up. Facebook 2.0 is coming out, and Instagram 2.0 is going to do a pre IPO on this product, and or Facebook's producing a car, for example, and they're launching a Facebook Tesla, for example. Where would people go to find out if these companies that's going to be doing this, so they can buy these, say, look for buying?
Yeah. So most of these, what I've seen is most of these companies in these early stages, they're there's a couple different major platforms
Hmm.
to where they list their opportunity on that platform. And then you create an account and you can buy into these, companies at this stage. It's one of them is called Republic.
Yep.
And I trying to think, I don't even know. There's a few, right?
Hmm.
So the problem though with that is that the amount of research that it would take to be able to pick out what really would be a potentially safe and a really strong play that has some big potential is very, very difficult. You'd have to sort through a lot of different opportunities, and you could probably make a case for and convince yourself that all of them look great. There's a research service that I subscribe to. It's called the Palm Beach Venture. It's you just go to palmbeachgroup.com, and I think it's a couple $1,000. So to get the research, so you really got to be committed to doing this process for that to get a return off that investment. But this is a team that has 155 analysts that scour all these opportunities. So they do all that heavy lifting for you. And then usually once a month, they deliver a pick for in your email box. And they say, okay. And they lay out all the different reasons why they think this is the next, 10, 20x type investment. I've found incredible value there. Occasionally, I'll launch, just give some of the picks away on my platform, Indestructible Wealth. I just did, there's one that I particularly like. I'll give to your listeners for free. It's called Rad Diversified. It's a pre-IPO real estate deal, which is really appealing. So this is a company that they could go public, but they don't. He even said this on an investor call last night. He didn't want to have to mess around with the whims of the politicians and the market and all of that affecting his valuation of his company. So you can get in for $1,000, and I think per share, and it has a guaranteed 5% distribution. So essentially, from the rents that are coming in, you're going to get at least 5%. But the average historical returns that they've experienced through their increase of the value of those shares has been about 30 to 40%. The way they increase the value of the shares is it's kind of like the same as Realty. They do an appraisal every quarter or so. And as the appraisal value goes up, then they readjust the value of the shares. So I just bought in a couple months ago, and my share price, when the new appraisal hit, my share price went up already. Not huge, but it did go up. So I love that play because I understand what their game is, what they're doing. I love real estate, and it gives me a passive investment that I can be a part of. But also, eventually the company could get bought out, or it could go public, and then I'm really going to crank out my returns. So.
And I love that one, Jack. Property and and those sort of things in the share market or pre-share market, is definitely a place to look at, and that's awesome. Let's get into the next one. We're talking about small cap tech stocks. So if you just want to explain to the listeners out there, what do you mean by small cap tech stocks? Because I understand what it means, but other people are going to go, why are we talking about cap and tech? And the term doesn't sound like any sense. What does it mean, small cap tech stocks?
Right. So you got, companies are valued based on their total, like what's their total market value. So if you took all of their shares and say they had just for simplistic measure, right? They had 100 shares that were valued at $1 million a piece, right? I know just for simple math. Okay, that's not how it works, but so you got 1,000 times $1 million, right? So what do you got? What's the company worth? 100 million.
Yep.
Okay. So that would be a small, still, even at 100 million, that would probably be more in the lines of still a small cap company. It's still, relatively speaking, it's small because on the large cap side, you got your Facebook over $1 trillion valuation, right? You got your, your FANG stocks, right? Facebook, Apple, Google. I don't even know what the N stands for. So these are your big guys that are, almost $1 trillion or so. Microsoft, 700 billion. So a company that's at 100 million, for example, in valuation, they're still a big company for you and I and everybody else. But in the grand scheme of things, that's only like 0.1% of the big dogs.
Yep.
So now we got to think of it this way. Who has more room to run up and to grow? Well, the big dogs, their big growth spur was pretty much behind them. I mean,
Yeah.
what are they going to do? They're going to go from $1 trillion maybe to go to 2 trillion. Okay,
Mhm.
so you double, which would be fantastic. But then again, I mean, that's not that likely. They're all so big already. They have a huge market share. So these small cap tech stocks that are really going in innovation, they're focused on, the next trends. What are the
Mhm.
next trends? Artificial intelligence, 5G, internet speed,
Mhm.
um, gene editing therapy, biotechnology, um,
Solar, 3D
automation,
printing.
3D printing, right?
Yeah.
So what I said, solar, right?
Mhm.
So if we know that these big trends are happening, these big innovative technology type trends are going to be like tsunamis coming in. These are unstoppable forces, just like LeBron James driving to
Mm.
the hoop, right? No one has figured out yet how to stop him. Right? He's an unstoppable force when he drives to the basket. So it's the same thing. These companies that are in positioning
Mhm.
themselves in front of these big trends, yet they're still small, so they can grow to 10, 20, 30, 100 times, yet they still have that type of room to run. Now, the question is, how do you find them, right? Well, I got the same research team. They give me these picks, palmbeachgroup.com. I love them because they do all the heavy lifting and the research that I don't have time or desire to be
Mhm.
able to do. So they give you these types of picks, and the big thing is you don't know who's going to really hit, right? Like there could
Yeah.
be any of them could hit. So you do what's called position size bets. You take, instead of taking, say, $10,000 and putting it into one that you think and you're
Mhm.
sure of, you take 10 different picks and you put 1,000 into each one. You only need one to really hit big to more than make up
Cover
for
your
the
cost.
others if they
Yep.
don't hit.
Oh, that's great. Yeah, it's such an interesting one. When you explain like small cap in 100 million, and people go 100 million. That's a lot of money, but a
Yeah,
lot of people don't understand the difference between a million and a billion.
that's a big.
There's a vast difference. You can't even explain or understand the difference between $1 million company and $1 billion company, right? And there's companies now that are going to $1 trillion.
Right.
Okay, yeah, you
Exactly.
know, yeah. So the growth from 100 million to a trillion, you know, I couldn't imagine. It's like people that had Facebook shares from day one when Mark Zuckerberg. There was a story about that Mark Zuckerberg originally in the beginning, people that helped Facebook. There was the cleaner and the guy that did his artwork that did in the original office. He originally gave him shares in Facebook, and when they went public, every single one of those people became like multi-billionaires because one guy gave Zuckerberg 3 paintings to put in his foyer in the first couple of years of his business, but he couldn't pay him. So
Right.
it's getting into that sense into a company from a small tech. If it goes up there. But I also
Yeah.
loved how you explained, Jack, about if you get the tips or if you've got your research, it's not throwing everything in one basket, not throwing all 10 grand into one company, but actually spreading it out because you have the potential if all of them go, but you also have that protection that you only need one of them to do decent to cover everything else.
Yeah.
And then you've also got a wider spread of companies because some companies will take a handful of years, 3, 4, 5 years to stabilize the market, and then there'll be a massive spike. Some other companies will do a massive spike in the first year and then they stabilize afterwards. So by splitting it in that way as well, you've got yourself this real great average growth year on year across the portfolio of your small cap tech stocks that you bought.
Yeah. I, I am I really in love with the stock market, the US stock market? No, I haven't had traditionally like all that much luck, right? From back starting at age 22. And then about 8 years ago, two of my major positions got attacked by a short seller. So there was some massive manipulation,
Hmm.
intentional manipulation. So it kind of turned me off and turned me into real estate. But so real estate and cash flow producing assets are my base layer in my private businesses, right? That
Hmm.
just produce incredible cash flow. So those create all this passive income cash flow that then I can take a portion of that and responsibly speculate with it into these pre-IPOs, into the small cap tech stocks. And if they don't work out, okay, no big deal. The real estate income is going to replenish those funds, and then I can fire away again, and my lifestyle isn't affected. So you don't ever want to be risking your current lifestyle for a better one. I think that game never works out for people who play it. Eventually you will get burned doing that. So the way I do it is responsible, yet it can really move the needle on your net worth if you just get a couple of these, picks to really that really take off. I do say adamantly for myself anyways, Lawrence, these are 5-year to 10-year holds for me. I'm not investing in, to get a quick hit. I'm playing the trends over the next 5 to 10 years. Let the trends play out, and then let's see where we're at.
Yeah, love it. So let's get on to the next one. And I got a funny feeling a few people are going to be watching will have quite an interesting position on this one. I'm a big fan. So it's Ethereum as a digital currency. I've invested in Ethereum before. I got out of Ethereum, funny enough, about a couple of years ago. I did pretty well on it. Got out of it a few years ago and went, geez, I've done pretty well. And I look back now going, I should have just held on.
Yeah.
But I'd love to know your thoughts, Jack, about why Ethereum as an investment option, as sort of your pick compared to Bitcoin or let's Doge or idiotic Doge. Or some other, meme coin or something like that. What drives you towards Ethereum as a choice?
Yeah, so just to kind of preface it, right? I still love Bitcoin. I mean, that's the big dog, and I think that's an incredible store of value. And I think there's still plenty of upside for Bitcoin, no doubt. Ethereum I like for two reasons. Number one is because of the network adoption. So when you look at, say, other prior technologies that have really kind of made a huge run up, Apple, Apple was the main kind of underlying technology that so many people built their apps upon.
Correct.
Right? So they got all of this network adoption because somebody built an app, they're building it on top of the Apple platform, and that's how it got distributed out. Whereas Ethereum, when you look at all the cryptocurrencies and the blockchain projects, so many of them are being built on top of Ethereum as the base technology layer.
Correct. Yes.
So now you've got non-fungible tokens, right? Where people are able to buy a piece of expensive artwork or even a car.
I'm not gonna say expensive artwork. I'm gonna say idiotic, overpriced artwork. I just want to drop that comment in there. And it's not. And I'm publicly gonna say it. It ain't fucking artwork. It's shit. Because $1 million for an image. Come on.
I know.
Anyway, sorry, Jack.
It's stupid.
Yeah.
I don't understand. I just don't get it. But it is there, right?
It is there, right?
Well, let's look at Real T. You talked about this on your platform. I haven't yet pulled the trigger, but I'm about to set up my account this week and start buying into that. I think that's a fantastic, real estate passive play. What's that built on? Ethereum.
Correct.
So there's so many projects that have real usage. This whole thing that's Ethereum, the problem that they're solving is being able to solve smart contracts, right? Where it takes out the middleman, and you and I who typically, we don't trust each other. We don't need the middleman anymore because we've got this incredible technology that creates this ability for us to do business together and have it verified. That's what Ethereum's led the way in doing. So I like it because of that. And then number two, I like it because they're burning their supply chain, their supply. So as a crypto miner, I don't particularly like it, because I do some mining, so we don't get as many rewards of Ethereum now than what we did, because they're burning the new EP 1559 upgrade is burning Ethereum instead of giving it out to the miners. Okay.
Mhm.
Well, that just makes the price of my Ethereum that I am holding go up in value even more. So I'm okay with it because of that. Right. So I love that. Now I didn't pay attention too much in high school economics, Lawrence. I had
Mhm.
two of my best, there's four of us in the class, two of my best friends, one was my mortal enemy. And so that wasn't a recipe for paying attention. We were very distracted with the
Mm.
banter. However, I do remember one thing: supply and demand and how it affects prices.
Mhm.
When supply goes down and demand either stays the same or goes up, there's only one thing that happens to the price:
Keeps
it
going.
goes up.
Yeah.
So that's what I see happening, is that we have both things happening right now in Ethereum. Supply is being burned or going down. It's being locked up too by
Mhm.
people that are locking their crypto and staking it. And then you got the demand increasing because the network is getting busier and more people are using Ethereum to do transactions.
Yeah.
Boom. Recipe for a very safe, to me, out of everything I think I'm doing, I feel probably the most confident in Ethereum, and it's a crypto, right? Now,
Mhm.
doesn't mean it won't be volatile. It's going to be volatile. I mean, geez, just like in the last 2 weeks, I think it's dropped, I don't know, 20% or something. I mean, it's a crazy ride. But if you're in it
Yeah.
for
That,
5 years, you
yeah.
don't care.
I mean, Ethereum, I can't even remember my numbers, but what is, I don't even know what Ethereum's going at today. But I remember buying Ethereum at, $100 or something, selling it at 5, 10 times. I made 10 times my money in 12 months. So that's 1,000%. I made 1,000% in
That's
less than a year, right? So 30% drop, I can take that. A 40%
yeah,
drop, I can take it. But it's again, people unfortunately with digital currency and not having the knowledge, not knowing or understanding, is going and throwing their 50 grand life savings in it today, and you lose 30% tomorrow, and they go, "What's going on?" But fundamentally, the currencies in the good ones have shown they come back and then they stabilize and grow. There's
yeah.
there's so many coins out there as well that is just junk coins.
John coins.
It's BS. It's been promoted by influencers because they're getting backhand deals to say buy this coin, and all they're doing is they're just dumping it on there when it goes up to like 1 cent. Which,
Yep.
guys, anyone can make a coin. To anyone that's listening or watching, you can actually create your own coin at a value of like 0.00001 of a cent. And then what they're doing is they pay influencers, go, hey, I'll give you a whole allocation of these. Go online and say you've bought this, so the value goes up. And you only need it to go up to like 1 cent coin, and you've made 100,000% on your investment. And that's why you see all these multi-millionaires, because they took the risk on this, or they got into it. Dude, it's one person gets rich, 99% people get screwed.
Yeah.
It's literally some of it's partially almost like a pyramid scheme.
It's
That's
a
just the
there's a
junk
I was
coins.
just gonna say Ponzi scheme, whatever
Ponzi,
you wanna
yeah,
call it.
yeah. So,
It's
but
an awful thing to treat other
yeah,
human beings like that, my opinion.
yeah, totally. But the actual existing legacy, I'm going to call it legacy because they've been there from day one, almost coins, the Bitcoin, the Ethereum, all of those ones, there's still a solid place to go into and look into.
Yeah.
I think the biggest thing that people struggle with, Jack, around the digital currency and the coins is just understanding what it actually is. A
Yeah.
lot of friends I talk to have still don't know. They're like, what is a digital coin? Explain it to me. Where's my money? How does it work? And we're not going to go through it down into in this show. I've spoken about it a bit on my program before, and I'm sure Jack has as well. So by all means, come look both in our brands, and you'll see that. But I think that's the biggest struggle people, worry about is what actually is it?
I don't know if I actually completely could say 100% that I understand it. Okay. So, it's okay. You don't have to be a genius to make a
Yeah.
fortune in cryptocurrency. What you
Yep.
need to focus on is network adoption.
Yep.
Are the number of new accounts, is it growing
Hmm.
or is it dying?
Yep.
The number of new accounts is like doubled in the last, I don't know, 4 or 5 months. That means
Hmm.
how many people are opening up account to buy crypto? It is going up like crazy. So that's the main thing that you need to focus on, is the network adoption.
Yeah, totally. So we're coming up to our fifth item, our last one today, and I think it's one that a lot of people have an understanding on, but we'll still go into it for a few minutes. And we're talking about single family rentals. And I'm guessing you already spoke about that sort of property is a cornerstone of your investment place because it is cash flow from day one if it's the right deal. To most investors out there, you should have some form of real estate in your portfolio. Majority of it should be in the real estate game because it's heavily cash flow. But talk me through single family rentals as a pick for you at the moment.
Yeah, I mean, with the amount of money printing that's going on in the US government right now, I mean, it's just all that liquidity has to go somewhere.
Hmm.
So it ends up in the hands of the people who are going to park it somewhere.
Yep.
It's just how money works. So it's coming into the hands of me eventually, even though I don't get the stimulus checks because I can't qualify for them, right?
Hmm.
But they're buying, they're using that to buy products that are businesses that I have or, whatever. And then all that kind of eventually flows into the hands of people who are going to invest it. And
Hmm.
we're going to park it in real estate. So it's real estate prices, I feel, are going to continue to rise over the next few years. I don't see that the money printing it may slow down a bit, but I don't think it's going to stop.
Hmm.
So single family homes are still a great way to park money to be able to use leverage to amplify your returns, bank debt. And, you're going to be able to get cash flow off of them and yet also have a shot at some pretty, decent appreciation.
Hmm.
I actually started a turnkey real estate company about 6 years ago. It's called High Return Real Estate. That's my second company. And we provide single family homes and duplexes to investors. We primarily are in the Indianapolis market,
Hmm.
and we the last few months, like we just don't have anything available. So
Yeah.
if somebody wanted to buy from us, we don't have anything. We're either holding it or we just can't find really good deals. So we partnered with a company called Boardwalk, and we're able to open up about 6 other markets
Hmm.
throughout the US in the Midwest, predominantly to where the price to rent ratios are still pretty strong. They can still cash flow.
Yep.
You can't cash flow single family homes on the coastal areas. The prices
Hmm.
have just gone up too high. They just don't make sense. You're gambling, I think, in my opinion, you're gambling too much. So we have properties still where Lawrence, I mean, you can get buy a house for 100,000 and it gets 1,000 a month in rent. So it still hits the 1%,
Hmm.
cash flow rule. They still cash flow pretty well. And you have a chance of them still, continuing to rise up in value. So yeah, we have this program called Cash Flow Plus that any investors can get into, that if they're interested in getting a hold of some really good quality
Hmm.
single family homes, they can get in, they can access 6 different markets, they can get additionally, they can get other cash flow type investments that are very safe. And it's this whole program on how to maximize your cash flows that you have coming in. Great for anybody in any country to be able to take part in as well. So I can get that link to you for your listeners if they're interested or whatnot.
By all means. Yeah. I mean, to anyone that's already a fan of the show that watches knows I'm in the property game. 60% of everything I discuss is around property and property investment.
Mm-hmm.
The New Zealand market, where I'm at the moment, is a little bit different to the American market in the sense of we just broke last week. We just broke the average, Jack, listen to this. The average house price in New Zealand at the moment is 700,000 US dollars.
That's crazy.
The average house price.
I
So
know.
we just went past New Zealand as the average house price across that. So yeah, it's an interesting time period where we've had 25 to 40% growth the last 12 months. 12 months before that was another 15 to 30%, depending where you are. So you could have done 60% growth in the last 18 to 24 months if you've held onto a property. So it does make it a very feasible investment, but it makes it very exceptionally expensive as well. So you've got to have that leverage capability in the New Zealand market as well.
Yeah.
We've also got a lot of tax benefits, but the government's slowly starting to close those doors, and I don't want to go into that. I've done a handful of episodes about the changes, so Bowman's got to look back on those. But they're trying to slow it down. I think it'll slow down for the mom and pop investors that own one or two, but the players out there that have 5, 10, 20 different options and have investments in other areas, they will just ride this wave out till the new rules sort of negate itself and fall away again.
We still have a lot of properties that are available even under 100,000, believe it or not. It's probably crazy to think of that, right? You're like, what? That just is a completely foreign concept to me.
Yeah.
But the ones where, we try to promote and put people into a place where they're getting like a solid B class property. That's your C class is a little bit tougher to manage. You got a lot more lower income type tenants that you can still do well with those. We've done well with them, but they have a lot more, they're a lot more volatile. There's a lot more ups and downs with those. Whereas the B class is you're getting a real stable tenant, really solid, job that they have. It's quiet neighborhoods. You can still get really nice properties like that for, 100,000. And it's just an incredible place to just park some cash and take advantage of property prices that aren't yet at a $700,000 average.
Yes, please. Can I send you some? Yes, please. Yeah. I sometimes I watch, me and my wife, I love watching a lot of property programs, renovations. I used to have a flipping business for about 3 years. I met myself and a business partner. We were called the two flipping boys because there was two of us and we used to flip houses.
Yeah.
And I watch his programs and you like see this person walk up and go, oh, I just bought this house for 400,000 and it's like a McMansion. Right, it's this ginormous house, and obviously not in the main cities, and it's like $400,000 US. And I'm like, you can't even buy, 1,500 square feet, 2 to 3 beddy anywhere in in New Zealand for the same price. And this guy's got like this, 3,000, 4,000 square feet for it. And it's just, sometimes it's a little bit frustrating, but it's each market to its own, right? So
that's right.
So you just got to realize that it works that way.
Yeah, what you're talking about is similar to for what's happening in New Zealand, that kind of average price. I mean, I would guess California is even higher average price than where you're at, maybe, and then, like some areas, the coastal Florida areas, East Coast, those are all insanely priced as well. When you go into the Midwest, the middle, of the country, there's still the prices haven't hit those kind of levels and seen that kind of growth. So that's why there's still incredible cash flow plays. They can still positively cash flow every month while you wait for that appreciation to continue to happen. And they are not going to go up. Historically, they haven't. I can't say they won't go up in the future like that kind of pace that you're talking about, but we don't typically see anything over single digits in growth of appreciation. But over the course of time, if you hold it for 10 years and you've got the positive cash flow coming in, plus you held it, now in 10 years from now, I mean, you have an incredible return on investment, right? With the capital growth plus the cash flow.
I totally agree with that. Jack, as we sort of come up to the end of the show, we're going on close, almost coming up to an hour, over 50 minutes already.
Cover
off the 5
we went way over your minimum or your maximum time. I'm sorry.
No, it's all good, man. It's great. So much insight, so much knowledge that you've given to everyone that's listening at the moment. Can you let our listeners and our audience know where they can find you if they want to learn more about what you offer, what you can help them out with? Where can they come to find those details out?
Yes. So my platform is called Indestructible Wealth, and my website is myindestructiblewealth.com. I have a podcast. I'm 42 episodes in as of this recording. It's all about making sense of the money game, finance, investing, particularly as you figured out in the US. It's Indestructible Wealth Show by Jack Gibson. So if you want to go to my website, it's got everything on there, got all my blogs, got my podcast. If you want to read my transcriptions of my podcast, don't want to listen, you can do that. And I also have a financial mastermind class where I teach people how to invest in the US and do the strategy. I have a 5-step strategy series that I teach people throughout my course. So the course I feel is very affordably priced right now. It's only $449 US. That gets you private coaching and also small group coaching for 5 weeks. I think it's a steal personally. I've been told to raise my prices by triple, but I just want to keep it affordable because I love doing this. I want to work with real humans and not I'm here in my podcasting office with my dog all day, right? It gets kind of boring. So I want to work with real people.
Awesome, Jack, and thanks. And to anyone else, as always, Jack's details and links will be on wherever you're listening or watching, and to reach out. And if there's anything, like I said, in the US space, you want that knowledge, by all means, go across. I've listened to a few of Jack's podcasts myself to learn more for my knowledge, because like I said, my investment knowledge and that sort of stuff sits on this side, the opposite side of the world to where Jack is. I do invest in sort of some of the shares across the American space, but I don't have the wider knowledge that I should. And I'll be definitely taking up and listening to more of Jack's shows to make sure I've got that next level of what I need. But again, thanks so much, Jack, for coming on show and providing the guidance, everything for the audience today. And it was an amazing discussion. And to everyone else, if there was something cool that you took away, if you loved it, if it was some insight of something you disagreed with, I'd love to know. Just send me a comment or question, depending on where you're listening or you're watching as well. And by all means, feel free to share this out, drop a like, drop a subscribe as well, so the show can keep going and you can learn more as each episode goes on and goes on. But at the end of the day, as I always say, stay beautiful, stay powerful. Until next time, see ya.